If you're still drawing support, resistance, and trend lines in 2025, that's likely why you're still stuck. There's a smarter way to read price. Orderblocks. Orderblocks show where big players stack real buy or sell orders. Think of it as footprints of bags. When price returns to those zones, it often reacts. In simple English, stop guessing lines. Start taking trades where serious money gets pumped into the market. In this video, I promise to give you 3 important things. 1. What an order block is, in simple terms. 2. How to mark it out on your charts, step by step. 3. How to tell a strong order block from a weak one, so you only take high probability entries. This is a tight 15-minute breakdown. I even added a free workbook down in the description below. So use it while you watch so you remember and apply. Okay, then let's get started. So today the topic for today is going to be on order blocks and how we can simplify order blocks for a beginner to understand how to use them and why we use them. Right, this is first and foremost what I'm going to be doing right here, making sure that you guys here understand exactly step by step what I am going to be looking for every single day on the charts and how to spot these order blocks right here. Okay, now you hear me say this every single day throughout the entire live streams. Order blocks here, order blocks there. Now, what are order blocks and why do they matter? That's the first thing I'll be going through right here. So get ready, take down notes, and let's get right into it. Now, order blocks are going to be used as key areas for buys and sells. They are basically your supply and demand zones, right? Now, you may be asking, Nick, look, there are so many supply and demand zones. How do I know that this order block or this fair value gap or this support resistance here is going to be valid? Alright, so the focus here today will be mainly on order blocks, but I will combine a few ideas of fair value gaps, liquidity and stuff like that to help you boost the win rate of that. But order blocks here are basically areas where institutions like large banks and of course financial institutions, they pump in a lot of volume in the market to push price higher or push price lower. Okay, now every single day brand new order blocks are being created. And how do you look for them? How do you spot order blocks? Now, as you can see on the charts, these are examples of order blocks, alright? But before we get into real life chart examples of how we get into these levels here, I want to show you with a very clear example on how to spot order blocks first and foremost. Number 1, alright, there are 2 types of order blocks, alright? Bullish or bearish order blocks. Bullish order blocks represent a buy zone for you to look for price to tap and bounce off, to look for price to continue going higher. And if you're going to be looking for a bearish order block, you're going to be looking to tap that area and use it as a sell zone to allow price to continue dumping. Okay, so if the market here wants to present those order blocks, how is it going to look like? It's going to look out just like this. I repeat, this is exactly what it's going to look like. Okay, now on top right here, we have the bullish order block. Bullish order blocks here are identified from the origin of the move before price action here breaks structure. Okay, now one very key thing to note about order blocks is this. First and foremost, you must see structure break. If you're in an uptrend, you are going to see the market here create a break past the most recent higher high. And only once the higher high has been broken through, like this, then and only then can you start to mark out your order block. Now, how do you do it? Now, you can see there are 2 examples right here. What I always say on stream, and especially what you guys here should take down as notes, is you want to identify the last candle that created the lowest point in price before pushing up higher. I do not care about the color of the candle. Can be bullish, can be bearish, can be red, black, white, I don't care. As long as it has created the lowest point in price, I am going to mark that out as my order block. Mark that candle that created the lowest point in price. In this case here, the bearish candle created the lowest point in price, so this is our bullish order block. Now, in this example here, what do you have? You have a green color candle, a bullish candle that created the lowest point in price, the bottom wick, as seen right over here. So this is the candle that created the lowest point in price before breaking structure to the upside. And hence, this is my order block. Okay? Now, same thing.
For the flip side, if you're looking for a bearish order block, this is what you want to see. If the market here has created a bullish candle that created the highest point in price before dumping and breaking past the structural low, then this is the candle right here that will become the order block. If let's say the market here creates a lower high, lower low, and breaks past this level here, which is needed before you create your order block, then this candle here, which is a bearish candle that has created the highest point in price, this is how I'm going to mark the order block, by identifying this candle and marking it out. Okay, this is the basics of how to spot and mark out your order blocks accurately to the exact level. You always see, right, my order block here is not a random level here that I draw. It's always snapped to the candle's high and low, the wicks. Alright, so this is how you mark it out accurately. Okay, but always remember this, right? Order blocks are part of a subset. What subset am I talking about? Supply and demand. Areas to buy or areas to sell. Okay? Demand and supply zones are areas to buy and sell. Order blocks are part of that. This is one concept that you can use to identify a demand or sell zone. Every single order block is a demand or sell zone. Alright? But not every supply demand zone is an order block. For example, a fair value gap is not an order block. A support is not an order block. Okay, now you know order blocks here are supply and demand zones. But remember, not every single order block is going to be an area for you to take buys or sells. You want to mark out high probability ones. So then how do you identify high probability order blocks? Okay, there are going to be three main things that I'll be going through. First and foremost, these are your rules for a valid order block. Write this down. I repeat, rules for your valid order block. I'm going to use this same slide right here. I'm going to not say slide, but this same depiction of an order block right here to explain the first one, which is you must see a structure break. Write this down. The first rule of a valid order block is that you must see price break structure. If the market here does not create a break pass like this, okay, let me just remove this first, delete, and then bring it back later on. If this happens, this is not an order block. You must see price break structure. Only once price breaks structure like this, then and only then can you mark out your order block. You must see a structure break. And from there, you can then identify the origin of the move, which is the last candle. Okay, if you don't have a structure break, then you don't have an order block. As simple as that. Same thing for the bearish scenario. The market here does not break past and it does this instead. No closure underneath. This is not order block yet. Only once this low here breaks, then you have an order block. Like this. Okay? Now, some of you guys here may be asking this question. Then Nick, what happens if price creates a wick like this? Is this going to be considered an order block? The answer is yes. Why? Because you have created a lower low. You have broken structure with a wick. It is still broken structure. Same thing for the bullish. If let's say the market here creates a wick. Alright? The moment this candle here creates a wick and closes, I mean, look, the moment price breaks out of it and creates a higher high, you have a bullish order block. So this is the first pointer. I repeat, first pointer, you must see price break structure. Okay? Is everybody clear? If you all type G in the chat, let me know. Second valid criteria or rules for a valid order block. You want to see your order block, your origin of the move, create a volume push, an aggressive push away from where the order block is. So you see price push up, break structure, good. What do you want to see? Fair value gaps. Write this down. Fair value gaps. Why do you want to see fair value gaps? You want to see fair value gaps because This means that it is creating an imbalance in the market between buyers and sellers. They are not the same. All right? Buyers, in this case here, is stronger. Therefore, you have a disproportionate amount of buyers compared to sellers. Way more buyers compared to sellers, leaving buy orders behind. Price is moving aggressively. This tells us that this order block is going to be strong. So whenever you see a order block plus a fair value gap just sitting right above it, this is going to be great. This is how you know that, okay, look, your order block here, if it does come and tap, is going to be a strong area for price to bounce off. Same thing for yourselves. If you see price action here create a push towards the downside and create a bearish fair value gap, same exact thing. Right over here, you're going to see a bearish fair value gap, indicating that there is volume from the origin of the volume injection into the market to help price break past this low. So if price were to return into this level here like this, there's going to be a good chance price can look to reject from it again. So far, I've gone through two rules. First one, you want to see a displacement or a structure break. Okay, no structure break, you cannot identify OBs. Okay, second one, you want to see the origin of the move create fair value gaps to show you that there is volume and that this push is high probability. Okay, so when price returns into the fair value gap and into your order block to collect orders, this will be a trading opportunity for you to take advantage to look for sells, or in this case here, buys towards the upside. Okay? Can, huh? Very good. Now, the third criteria for a valid order block, write this down, is going to be considerations of liquidity. Alright, now, there are many different types of liquidity, so let's go through two main ones here that you can use, right, as a beginner. Okay, so now, I'll move up to this example right here. Let's talk about the different liquidity types that you can use to take advantage of a higher probability order block. Now, you are going to be creating low highs, lower lows, higher highs, higher lows throughout the entire day in the market. And sometimes the market here doesn't give you a clean setup, just like this. The market here doesn't just tap and go or tap and dump, right? It doesn't do that, right? This is basically picture perfect, as much as possible, a picture perfect order block. Okay, if the market here decides to create, for example, a bearish order block in this case here, lower high, lower low, you break past this low, right? Your structure break, that's already confirmed, good. And then price comes back up to retest, and it starts to consolidate. This creates equal highs and equal lows. This is one type of liquidity that could be created before price eventually taps back into the order block. Now, why is this a boost in probability for this order block? Because the smart money wants to sweep stop loss hunts. It wants to collect orders. It wants to fake out traders. That's what the market loves to do, right? What a lot of beginner traders love to believe, right? Oh, I see this resistance zone I can sell now. So what's it going to do? It's going to purposely create an area where it looks like, oh, yes, this is a rejection zone. And this is going to help push price lower. But in fact, this is just a lead up for price to take out all the orders here to eventually tap into the proper sell zone right here, your order block. Okay, so in summary, what you want to see, if you are going to be spotting order blocks, if the market here is going to create equal highs, then you know that your order block here is going to be higher probability. Also known as manipulation. Some may know it as inducement. Some may know it as equal highs or liquidity, to simply put it. Alright, this is the first type of liquidity that you can pair with your order block. To know that your order block here is a strong area to look for sells. Alright, the same is applied for buys, if you just flip the chart right here. Let me just quickly flip the chart. Same thing. If you're looking for a bullish order block, you want to see the market here give you what? Equal lows. And eventually come down into it. Alright, later on there'll be live examples, right? I'll show you exactly what I mean by equal lows like this, and how you can use order blocks from far away to get setups like that. Okay? It happened this week as well. So yes, definitely there'll be examples. Now, the next type of liquidity that you can pair it with your order blocks is going to be fair value gaps. Once again, like I mentioned, okay, you got supply and demand zones. And order blocks are part of that subset. It is a supply and demand zone. But if the market here creates a fair value gap, it is also another supply and demand zone, correct? There are going to be orders sitting at these areas. So if the market here decides to create a fair value gap, and perhaps maybe you see price create lower highs, lower lows, lower highs, lower lows. But Nick, didn't price action here break past this low? So shouldn't this be an order block? You all will probably have this question, eh? Absolutely. If you see an order block and just right above it is another bearish fair value gap, another area where there's a lot of orders for price to come and sweep, then this will be used as liquidity, your fair value gap, to eventually come into the origin of the sell move. Is that clear? So you can see you don't spot every single order block. Why did I use this order block instead of this one? Because right above it, there's a fair value gap. There are orders sitting right there. So there is a very high chance for price to eventually come and sweep past the fair value gap, collect the orders in here, and come back into the origin of the sell move. Alright, which is why you don't see me zebra trading on street. I mark out very specific order blocks. Because I take into account liquidity points like this. Equal highs, equal lows, or fair value gaps. Okay, so let me summarize once again. What are the rules for valid order blocks? There are 3. BOS, you need to see price break structure. Either towards the upside or towards the downside. Either one. Right? It has to break structure. Number 2. Fair value gaps. Just like I've mentioned, from the origin of the move, must be present. Number 3. Consideration of liquidity points. All these 3, the more confluence that you have. For example, if you have all 3, this makes it a very high probability order block. If you have just one, that is already a high probability order block. So the more confluence you can stack, the higher probability it is.
This was part 1 of 2 of our order block series we did with the premium community. We went through the basics of order blocks and how to spot high probability ones. In the second part, I'll go through how to find them in real life charts and more advanced order block concepts to drastically increase your win rate on live charts. Subscribe to this channel for notifications on our next video. And if you want to see us trade live, then click the link in the bio which says get my signals for free and get my notifications on our live streams where we demonstrate these concepts live.